So let's start from the USD Yen weekly time frame. We can see here that prices went down to 105.57, bounced up to 110.62, and then we can see here that there is a black Marubozu candlestick. Let me highlight it here. So this one is suggesting that downside is going to continue. However, we are at 105.57 and 20-month low, strong support level. If we go to the daily time frame, we can see three black crows, which is the black Marubozu on the weekly is represented in the daily time frame as three black crows. They found support the prices at 106.35. There was an expectation of continuation of the downside, and these black candles were formed before the announcement of non-farm payrolls. However, the weaker NFP have increased the downside effect. Prices went down to 106.35. However, on the open of the new week, we saw a correction of the USD Yen, and the correction actually has defied the previous downside signals. Nevertheless, we are at a strong support level here, with Bank of Japan most likely being concerned about the strength of the yen. There were some reports about that. In addition to that, last night the final GDP data for Japan were released, and the quarterly growth was revised upward from 0.4% to 0.5%. And the current account of Japan narrowed to 1.6 trillion yen from 1.9 trillion yen in March, suggesting that lower demand that was a signal for a lower demand for the Japanese yen. Nevertheless, we also see here that the downtrend prevails. There are lower highs and lower lows in the chart, and that increases the downside expectations. However, we need to keep in mind that there is a very strong support level at 105.50. In addition, there are some uncertainty growing in the Forex market. Risk appetite is getting worse ahead of the UK referendum. Also, next week we'll have the FOMC monetary release. There is no expectation for a rate hike next week. Janet Yellen has downplayed actually didn't downplay. Actually, investors were expected from Janet Yellen to speak about a rate hike in the next months, and that didn't happen. So it was dovisher than expected. If we go to the intraday, we can see that the USD Yen is mainly in a range formation. There are some data to look ahead for today, such as the US job openings. It's a mild news release, and is considered a leading indicator. Nikkei was up today at 0.7%. Other stock indices were also in positive ground, and that is actually turning the sentiment towards a higher appetite. Technically, we're closer to a strong bottom level. As we said before, there's a strong support at 105.50. And with that said, I wouldn't expect prices to go below 105.50 this week. And therefore, prices could move towards the previous resistance at 107.89 and retest that resistance during this week. As we move ahead towards UK referendum and perhaps FOMC, which could be a little bit more dovish than the previous time, we might see an attempt to testing 105.50 next week. Let's go to the Aussie USD. We can see that the Aussie USD in the weekly time frame peaked at 12-month top at 0.7835 and then dipped mainly during May at 0.7146. This downward move was happening because Fed rate hike chances were mounting in May, while the Reserve Bank of Australia was getting dovisher, or the expectations of the investors were getting dovisher on RBA. Let's go to the daily time frame of the Aussie USD. So the Aussie USD found support at 0.7144. in the daily time frame, and then it recovered towards 0.7467. It breached the moving averages, and now it's making a golden cross formation. This formation is suggesting that upside is going to continue. Recently, the RBA maintained the interest rate unchanged at 1.75% and has stated that economic conditions and other factors are improving, unless apart from inflation, and that is actually increasing the demand for the Australian dollar against the US dollar. Also, current low rates they support demand, and we can conclude that RBA is moving away from dovish tone. So we see a change in the Reserve Bank of Australia versus the Federal Reserve divergence. And on the chart, though, we can see that there is a strong resistance at 0.7467 in the daily time frame, with stochastic being overbought, and we will consider that there is going to be some extension sideways or a corrective move before testing again the 0.7467. Let's look at this in the intraday. We can see here that the Aussie USD in the last week has been getting more aggressive. There's a steeper uptrend line with resistance at 0.7464, as we said before, on the daily time frame. Also, next week we have the FOMC. Federal Reserve is not likely to increase rates. Nevertheless, Australian home loans early this morning were below expectations, weighing on the Aussie, on the Australian dollar. At the same time, we had some mixed data from China, and that is also weighing on the Australian dollar. Therefore, as I said on the daily time frame, that is confirming my opinion that the Australian dollar against the US dollar will continue in sideways or make a short correction before we retest the 0.7464, and perhaps uptrend is going to continue towards the next resistance level at 0.7514.
While everyone is really talking about the GBP or Euro, I believe the opportunity lies within actually the Swiss franc. And the reason being is the fact that I've been analyzing the SNB balance sheet for the last couple of weeks, and I see that pretty much on daily and weekly basis, SNB is intervening the Swiss franc. So they keep on selling the Swiss franc, and they keep on buying the euros and USD, etc., to keep the Swiss franc at a balanced level. So I believe whenever the Brexit voting is going to be taking place, it's going to be giving us an opportunity to take advantage of a strengthening Swiss franc, just like what we had on January 15th of 2015. So we can expect the SNB intervention to take place up until the actual Brexit voting. And from there onwards, there is a high possibility that SNB will not be able to catch up with the momentum that the market will have. And it will end up pushing the USD Swiss franc down, as well as the Euro Swiss franc down as well. When I analyze the market from the true Fibonacci wave perspective, I can see that the following support that we have at the moment lies within the level of 38.2% Fibonacci retracement zone, and that is the 0.9549 level, say 0.9550 level. And this is going to be probably achieved within this week. However, though, if you are going to be looking into further opportunities to take a longer lasting short positioning for USD Swiss franc, I would expect the pair to bounce from that level and rise towards once again to 0.9777 level, which is going to be basically the level where we have the 50-week moving average, and from there onwards we can see it bouncing down as well. Now, if we look into daily time frame, you can see that indeed the 0.9550 level has been a strong support level. You can see the pair consolidating within this level. We had this sword candle that I always call occurring over here, which was indication of supply and demand in the market. And at the moment, we are going to be seeing further continuation of the bearish market development, mostly because of the fact that the pair is below the 50 and 200 moving averages. The MACD is breaking below the zero line, so we would indeed be expecting the pair to continue its bearish development furthermore. And the other side as well, we can see that 0.9777 level is also falling onto 61.8% Fibonacci retracement zone, and it is just between the two moving averages. So it also gives me an opportunity to take advantage of it whenever it will happen. So we have one resistance here, one support over here, well, later on turned into resistance as well. So we are now going to be looking for that level, and it will only be taking place, I believe, in the next 2 weeks. And at the moment, what do we really see? If you participated in one of my analysis about the price action, you can basically see that we are into this intraday channel that we always look into. Since this intraday channel is basically between the, well, below the two of the moving averages, and if we make this 20 moving average and this 100 moving average, we can strongly we can see that a strong momentum in the market, that the 20 moving average has been acting as a dynamic resistance so far, and what we should be looking for at the moment would be a break below 0.9635 level in order to see further continuation of the bearish momentum just towards the 0.9550 level, as we just discussed on daily time frame as well. Moving on to Euro Swiss franc, we have had a choppy market. Well, it is so far sideways market development, and the answer lies within the commentary that I just gave a few minutes ago, which is all about the SNB. SNB has been intervening the market pretty much on every week basis. Sometimes it even goes way too far, and it does it on daily basis. So that's indeed the reason why we have seen the Euro Swiss franc side ranging so far, and this side range has been so far 250 pips movement between 1.0750 level to 1.10 level. And so far, they are going to be having trouble to keep it up with the Swiss franc buyers. And what we will be seeing, so in a short range, short to medium range, up to and right after the Brexit voting, would be that the pair is going to be continuing on its bearish move. If I were to trade this pair, all I would do would be looking to short it from 1.10 level or higher, and I would just keep on hold I would just keep holding this position minimum towards the 1.05 level. That's approximately 540 pips market movement, and there is no really up momentum for this pair at the moment. It just doesn't really exist, for the fact that the Brexit voting will put the euro under pressure. So euro is going to be depreciating. It will give the safe haven assets such as the Swiss franc and the US dollar further upscale momentum. So it will strengthen the Swiss franc. So another reason for the pair to go down. Euro to depreciate, the pair should go down. Swiss franc to appreciate, the pair should go down. UK to exit the euro, the pair to go down. UK to stay in the euro, still the pair should go down. So we are in such kind of a strange momentum that the market is giving us. Now let's move on to US dollar, Canadian dollar, as we were asked by some of you guys just before the webinar. I want you to take a look at this trend line. The trend line that I have here has been there, well, so far since 2014. And it is giving me a great opportunity to see to where I should be longing or shorting the pair, and from where I should avoid trend continuation entries. And you can see that in April, the pair touched it and bounced back. It was approximately 550, 600 pips bounce. And once again, we are now seeing the pair touching that level again. So it's going to be a hectic level for us to take a look at. Now, on this trend line is going to be changing because it's not really stable trend line. But the main level that we are going to be looking is basically this level. So where the 50 level, 50 Fibonacci level is lying at, and that's 1.2690 level. So what we are going to be expecting for this pair at the moment is going to be, once again, testing of 1.2690 level, which has been a previous resistance level. You can see over here one resistance, second time resistance, and then it turned into support once, and there is another support zone over here. So we would be looking for the pair to find itself as support between 1.2690 level, but the best support that I'm going to be looking for will be 1.2495 level, which is very close to, well, 5 pips difference between 1.25 psychological support level. And from there onwards, I would be closely watching the oil prices and make a decision based on it. Just for your information, I'm not really bullish on crude oil at the moment, despite the fact that there is a political game behind the crude oil prices right now. But take a look at a couple of things. The Netherlands decided to ban all the oil or fuel-driven cars by 2025. Norway on the same direction. Denmark on the same direction. Germany has been producing 100% of their electricity needs from renewable energy, such as the wind energy. So we are moving more and more towards the renewable energy, and there are more and more innovations taking place. So on a long term, crude oil is going nowhere, and it should be ranging between $55 per barrel to $40 per barrel, and that's going to be the level that we are going to be expecting to see from crude oil for the next probably 2-3 years. That's my personal opinion. Now we are going to be looking into gold, and that's going to be the last tradable instrument for today. The main thing that I want you to take a look at for gold is the analysis we had last week, where we said buy gold from 1200 level, and check what has happened. The valuable metal made the lowest low for the week at 1199.79 level, and that was its lowest low. So why it was that 1200 level? First of all, we had a strong support level, mostly because of this candle over here. I'm referring to the 14th of February weekly candle. And also we had support due to this level that you can see. We had this candle in history of June the 23rd, 2013. We had the weekly candlestick, 3 candlestick formations of December 15 to December 29 weekly candles. And so far 1200 level has been a major support level. And it also falls just above the 110% true Fibonacci wave retracement zone as well. And at the moment, I'm expecting the pair to find itself a resistance, and that resistance is going to be at the level of 1262 level. So if you are long in the gold, you should be looking into further long continuation or bullish continuation, and that's going to be just towards the level of 1262. And my analysis is based on this candle over here, since it is giving me a signal about the supply and demand of the market. And it also is falling just above the, well, it's falling just $6 above the 161.8% Fibonacci retracement zone. And therefore, we will be looking for a correction wave or a breakout. So if you see a break above 1262 level, it could possibly give us a further indication of the bullish continuation. However, we are likely to see a choppy market from 1262 bouncing down to 1246 level and continuing within this level until the 23rd of June voting that we will have. This is it so far for today. Once again, today's session was delivered to you by A2ZForex.com in association with Fidelis Capital Markets, FCMForex.com. And we have many of these great webinars on weekly basis. Adamos and myself, we are together every week on Wednesday just to deliver education, market analysis, and extra information for you to be able to take advantage of these market movements. And additionally, we have even more webinars and recordings of, well, sometimes these webinars do not go on A2ZForex.com, and we end up having it on A2ZForex YouTube channel. So I also would like you to go ahead and sign up to our YouTube channel and follow us both Fidelis Capital Markets and A2ZForex on different social media channels as well.